So it all starts from this one, from Jenga, an investment fund house. This report is actually very good. I would say they did a research in 2022. They looked back 10 years. They screened through all the stocks that has produced return that is 10 times. So 10 times, how much is the compound annual return? So it's roughly 26% a year. This report, it is free. You don't have to buy. So it's published on their website, Jenga. So they categorize those stocks, more than 400 of them, into all these different categories. We are going to talk about a few of these stocks here. So let's get to talk about the first stock, Texas Pacific Land. And in summary, they actually own 880,000 acres of land in the West Texas, and they sort of like a toll collector in the Texas oil industry. So basically they got oil royalty. So since their business model is like a toll collector, so they don't have to use a lot of capital expenditure to dig oil. Also, that's why the operating profit margin is very high, and they are debt free, and they pay good dividends, and they do share buybacks in the US. Their business is more like a monopoly. Ganfeng Lithium. Let's summarize what they do. They are just lithium compounds manufacturer. They control the whole lithium ecosystem. Lithium is commodity price, and it is quite cyclical. It's volatile. Next stocks is about this company called Trax. This is listed in New York Stock Exchange. Summary of the business. Trax company replacing lumber for furnishing. The business actually used to be bad. From 1999 to 2012, it is less than $5. They have high debt. So actually the turnaround is when they hired this CEO, Ron Kaplan. It started growing back again. Now become a very good company. So it's higher margin products. And then now their market go beyond USA and they have a refreshed branding. This is a sports brand in Anta. They started their business from here, from Fila. And then later on, they do their own brand. Just a summary about them is, behind Nike and Adidas, they are the third biggest sport apparel company in the world. Fila brand actually have 44% of their total sales. 2009, they acquired Fila and they grew too quickly, but then they actually have to close down 600 stores later. I think this is due to the Olympic at the time. 2014, the turnaround when they do the Anta brand, when they go into mass market and they serve the lower middle class. Their sales direct to consumer, this is their own store or their e-commerce, like one third. Revenue and profit compound at 18% per annum. So we're done with Anta, and I think this is the last company we're going to talk about. It's called Salma. Some summary. Norway produced 53% of the whole salmon supply. Chile, another country in South America, they produce 25%. And due to the limited specific region, they need cold and stable sea temperatures. So that means that it's not easy for other operators to just come in to do the business. For information, salmon is also commodity. It's just food. So it is subjected to the supply and demand. To be able to have high profit margin, innovation is actually very important. Salma has this very special technique. They actually can do offshore farming technique. And CAGR revenue is 16.3% annually, and operating profit is 54.5% growth. Investment opportunity, it presents during the period of fundamental issues and negative sentiment. Out of the report, there are 400 over stocks. So you can read through them, and they do case study not on every one of those. And they summarize 10 lessons. So what can you do now? You read the report, download it, you identify some companies to study in that, and then you choose the companies you have high conviction.